All right, folks, welcome to another very special edition of the VINE Rant. I've got a great guest, a very good friend of mine, and someone who's, who last year taught me, how to improve my golf game, because I'm not a great golfer at all, at one of our tournaments. I've got Rizwan Qureshi from one of our alternative lending or B lender partners, Equitable Bank. And what's amazing about having you on here is most of our bank partners are hesitant to talk, at least publicly, in a bit of an open forum very casually, which is what this whole Vine Rant is for, about what they're up to, what's going on. And so we're very, very happy that you're here to give us a little insight on what's a B lender, what's an alternative lender. Can I even call you a B lender? Are you guys okay with that? And that's kind of,
Well,
that's what we're going to talk about today.
yeah. So, first of all, thank you very much. And obviously, my golf game isn't the greatest. So, for those people
It's a
that are
lot
going
better
to
than mine.
reach out to me to get pointers on it, I'm pretty much terrible at it. I do my best. But I really appreciate you having me on. And it's not, I can't speak for some of the other lenders. I mean, you guys are a great partner of ours. So, of course, anything that you guys need from our end, I'll definitely jump in. So I guess to introduce myself, Rizwan Qureshi, I'm one of the RBMs for Equitable Bank.
RBNs for the non-technical, public viewer, regional.
Regional Business Development
Okay.
Manager
Yeah.
for Central Toronto. So we have quite a few of them, but I handle the Central Toronto region. But essentially, just to get started, I mean, you mentioned, what's one of the biggest differences between an A and a B lender, right? Look, I mean, at the end of the day, it's all about customers out there. You don't always have A customers out there. And you'll see a lot of B lenders out there, looking for some of the market share as far as capitalizing on some of these clients that may have less than stellar credit or maybe self-employed. It could be multiple reasons why clients may not be able to qualify on the A side. Hence why there's a market for B lending. So, theoretically, essentially, B lenders are, they offer solutions to clients, that may not fit on the A side. As far as qualifications, B lenders tend to have more of a flexible entry to qualify or less barriers to qualify for a mortgage or their products. But then, that's generally offset by, maybe a higher rate or a fee involved,
Yeah.
right?
Yeah.
But there's a huge segment of the market out there that still needs B lending and still needs C lending, which will be your private lending as well.
Yeah.
So that's one of the major differences there is a lot of brokers tend to reach out to me and say, what's the goal for their client? Their goal for the client has always been to get them into an A lender. But what people tend to forget is it's always about baby steps, given their current situation, credit, income-wise, and we're here to help them out to get to their end goal, which is inevitably a lender, right?
Would you say it's fair to say that, with B lending, the way I describe it to clients is with a regular bank, you have to fit this sort of box of policies and rules and guidelines. With B lending, it's more of a common sense approach. Like, I know your business makes a lot of money, but you don't pay yourself enough, which typically means you're getting a smaller mortgage. But help me understand your business and your revenues, and give me a bit of an understanding of what you're really making, and that's how I'm going to give you a mortgage. And in exchange, the rate will be a little bit higher. Is that kind of a fair way to describe it too?
Yeah, it's somewhat fair as well too. You also have to look at the risk appetite as well too, right? Um, because on the A side, a lot of the mortgages tend to be insured, right?
Yeah. Yeah.
So they're backed up by the insurer. On the B side, it's heavily more weighted on the collateral and as well as the client's ability to repay that mortgage. Now, yes, there is flexibility on how we could perceive self-employed income. There are
Yeah.
different options. We can utilize bank statements versus financials or NOAs. So there is more of a flexibility on the B side, and like you said, more of a common sense approach to
Mm-hmm.
make things work, right? So yes, you're correct on that.
Who would you say would be your typical clients? What's a typical sort of client profile you on average?
Well, I mean, it's really tough to pinpoint our typical client now.
Like, I mean,
You
like
know, give it
like a lot of
right.
self-employed maybe, or maybe Bruce credit or combination, or do you find that there's,
Well, starting from more of a generalization, I mean, given our product line, we do offer A lending, we do offer B lending, we also have HELOCs, we also offer reverse mortgages. But in speaking specifically about alternative lending, which is our B lending, majority of our clients are self-employed. So there's three types of clients that we generally look at on the B side. Your self-employed clients, obviously, your investors, right? So people that have large portfolios, rental portfolios that may not be able to get a mortgage from your traditional bank or your A
yeah,
lender. And lastly, what's always been there is generally obviously people that have less than stellar credit that may not qualify on the A side. So I would say those are the main three types of clients, but more so we are seeing a lot more self-employed clients as well.
yeah. But I always tell clients, because obviously for being more flexible, you're paying a little higher rate. But I think in the current environment where we have historically low rates, some of your best rates right now are lower than where we were in January in terms of the big
Yeah,
banks. So it's
no, of
not like
course, of course.
8% interest rate. Some of the rates are at close to 3% in some cases here. So
Yeah,
I
yeah,
think I think to bring it to context, it's sometimes I present it as almost a financial or tax planning solution to self-employed people, telling them, look, if you make 100 grand in your business, but you pay yourself 20,000, you're not going to get much of a big mortgage with a traditional bank, even though they're going to give you a
right,
lower
right,
rate. But if
right,
pay yourself 20,000, but I can show that your income's closer to 100, there might be an opportunity to get it done on the B side at a slightly higher rate. But in exchange for
right.
that marginal cost of interest, you're saving potentially tens of thousands of dollars of taxes on your tax return. So I think that's the
Of
logic
course,
that makes a lot of sense.
exactly. And to add to that, look, I mean, it also comes down to what kind of property they're buying. Is it a rental? There's also the benefit of tax write-offs, regardless of what the interest rate is. And I think what it is, regardless of what the rates sit at on the B side, clients will tend to compare it to the A side always.
Yeah.
Now historically, we're below 2% on the A side.
Yeah.
And I thought I would never see this on the alternative side. We're sitting at 299, right?
Yeah.
And I never thought I would ever see that. But what clients will look at is the difference between A and B rates right now.
Yeah.
So yeah, so a broker's job does tend to get a little bit tough in regards to explaining to that. But the way you hit the nail on the head is the tax benefits of it, depending on why they're coming on the B side. And
Yeah.
the other thing is, what I always advise some of my brokers that I talk to is, coach them, be their broker for life. Tell them, listen, this may be an opportunity right now for you guys to be in the B side because of whatever situation you guys are in, but it's
Yeah.
a
Yeah.
baby step. It's a baby step to the A side, right?
Yeah.
And that's essentially what it is, right?
It's
So,
sometimes another area that you guys do quite well is if I've been in a specific type of industry for a number of years, salary employed, and I've now decided to improve my financial ability, and I've converted to a business. Maybe I've took on some clients and I'm doing some consulting or something. Traditionally, when you're at those initial stages of your new business, it's difficult to get a proper mortgage because there's no historical data for that business. But on the B side, I
right,
can say, look, I've been in the same industry for 5 years. Here's all my income. I'm now doing the self-employed work, and I have a couple contracts that will show that I actually make more money now. I just don't have a 2-year history. I find that, like you said, it's a bit of a stepping stone. Like, why do we go to take your file to a B lender, get you into the real estate market now? The rates are very reasonable given where we're at. And then
right,
after 1 or 2 years, if you've made those changes to get you to the A side, we can then shift you to an A lender. So in some cases, it can be a baby step.
right. Yeah, it can be. And you know what? Also with us, like the viability of income, there's a lot of flexibility on the B side. And as you know, I mean, with Equitable Bank, minimum self-employed requirement on the B side is 6 months, right? So
Yeah,
there's quite a
it's
little bit of
huge.
flexibility there.
Well, so with COVID, that's kind of the
Yeah,
most used word probably in 2020
you're
forever.
right, right.
Well, I obviously it had an impact on your business, but what are some things that you learned from COVID in the way you look at files, and what are you guys doing now going forward, knowing that some people, may continue to lose their jobs, or some businesses may go under? What are you doing now, or what can you share about your sort of policies in terms of what you're doing with that COVID adjustment?
So Before I get into that question, I mean, just to give you a little bit of a snapshot of us as a bank, right? I mean, we're a huge bank now, Schedule A bank, over 30 billion in assets, and the bottom line is we're here for the long run, right? So we tend to take a low risk approach on certain scenarios, certain lending criteria when something like COVID comes up, right? Because there's always that unknown. Nobody knows how the market's going to react, right? So obviously, we have to be very prudent on our risk lending and certain areas. So as far as obviously affected everyone's business, right? But with us, based on how we do prudent lending, it didn't have too much effect on us as far as deferments and so forth, right?
That's good.
Now going forward, obviously, a lot of customers have been affected. Some people are laid off. Some people are on CRB, EI, waiting to get back. Look, the best way I could explain it is there's not a single policy or guideline that I could tell you that we're going to do this for every single client. But the best thing what we do is do customized underwriting for that specific client, where we'll identify what the situation is, what their current income situation is, how can we work around it. And I can tell you my team's working hard on it in regards to trying to figure these nuances out. So not one deal is ever the same as the other deal, right? But taking into account what the future holds, you hear about the second wave coming now, and I truly hope it doesn't come, but we're in
Yeah.
phase 3. You see restaurants opening up, you see people getting mortgages now that they normally wouldn't have during March, April, and May because they were shut down for COVID. So it's more so a challenge for our underwriting team is to how do we evaluate clients based on what the future holds if the second wave comes, right? So in certain cases, we're taking a low risk approach, maybe a wait and see game, but we are able to identify certain clients that do have a lot of savings, a lot of assets, and we could offset that risk by mitigating that, right?
Mhm.
So the best way to explain it is, look, I mean, nobody knows what the future holds with COVID, but things seem to are getting back to normal as far as lending criteria and how we look at things. But we're still a little bit on our toes as far as what the future holds. So everything is still customized to what the actual deal is for now,
Yeah.
right? Yeah.
I think you guys have done an awesome job, and I think I like the way you worded that. You're right. It's kind of like with B lending in the current environment, it's really just customized solutions. And what I love about you guys is
Exactly.
sometimes we're not really sure how to make it work, but we have enough data to present you with all the details you need to know. And you guys are very good at sort of crafting, like, okay, well, if we position it this way, or if we can manage this risk or this question or whatever it is, I can present your client with a solution. That's kind of what we love about it is that, unfortunately, everyone, I think as we move into more of a labor force that is doing Uber jobs or this sort
Right.
of, non-traditional type of income, whether the banks haven't
Right.
really figured out how to give you a mortgage on, you guys are able to sometimes step in there and say, well, I know you don't understand how you make income. We understand your credit and everything going on. Here's the
Right.
solution, the
Right.
customized solution you're giving it. I think it's a really big need for Canadians, in this current market that are, I
Right.
think, not able to go to a salary job. So I think I would only
Right.
imagine B lending will only get stronger and bigger.
Oh
Are there
yeah.
any sort of
Yeah.
products or solutions that you guys have in the pipeline that you would be willing to share that would be, kind of worth mentioning in terms of future
Well,
possible releases?
Well, I mean, nothing as far as anything that's hidden, but, our motto is to be a challenger bank, right? And to be a challenger bank is to go against the status quo. And that's what we've always done and identify certain market niches where we could thrive in. So as for certain future outcomes, future products, can't really comment on that just because
Yeah.
I'm not
Yeah.
really sure what
Yeah. I
our
understand.
executive team has in mind, but I could tell you what we have. Our product offerings right now are definitely catering to what the customer's needs are as of right now. Aside from our A lending, aside from our B lending, we have our reverse mortgage, right?
Yeah,
That we
this
just
is huge.
launched, and it's massive now. And the reason we saw an opportunity where there was a lot of baby boomers that are retiring, right? And we saw a huge market for this, right? So hence why we got into the reverse mortgage market, and it's thriving for us. It's a great product, great option for pensioners, that are looking to refinance and maybe give some funds to their kids, so they could buy a home, or even travel. It's all about having, coming from immigrant families. It's always about parents not wanting to leave their house after the mortgage is paid off, but
Yeah,
they still want to live that existing lifestyle that they had. So this allows them to do that, right? So it's a great product. But as always, anything new that does pop up, I do cascade it out to you guys. So definitely stay tuned if anything comes out. But you know what? To be honest, 2020 is a COVID year, so it's all about it's week by week, and it's always something may pop up next week that we have to be able to mitigate and understand how do we lend on a certain scenario. So it's very interesting environment that we're in right now,
it's
right?
definitely.
So
Well, I mean,
yeah,
look at us. We're having a conversation. I know before the call, you're like, I had to go to this special place, make sure it was quiet, nobody interrupted.
yeah, yeah.
And this is the world we're in now. Otherwise we would have had this in person and had a much different sort of meeting. But it's a
No,
different
but
world, and I think,
one thing that I've learned about this whole COVID thing, it gets people out of their comfort zones.
yeah,
You
yeah,
know, People tend to get stagnant as far as how they market themselves, and how they talk to people or how they see people. But this kind of forces you to look at things the other way, right? Now with us, we're holding a ton of webinars with our sales team and our broker partners. So it allowed us to grow in that aspect. Now me traditionally, sales wise, I was always on the road visiting you guys, visiting
yeah,
my
yeah.
brokers. But COVID
Dropping
kind
off
of,
donuts, dropping off
yeah,
donuts.
dropping off donuts, the San Remo donuts. But COVID allowed us to look at different avenues of marketing ourselves,
Yeah.
and I think it just opens up your eyes as to the possibilities out there too,
it,
right? So
it
it's great.
forces
Yeah,
forces change and innovation and adopting technology. And I think this could be a whole other rant really, but I think it just sort of forces us to, like you said, get out of your comfort zone and find ways to adapt and
right.
evolve from that new world. And I think you guys are doing an
Exactly.
awesome job, and you guys will continue to grow. And we're very fortunate that you guys are our partners, and I'm happy that you were on here today. And
Awesome.
I
Yeah,
appreciate it. I want to hold you to possibly doing another chat specifically about reverse mortgages, because I think it's
done.
a little bit
Yeah,
misunderstood, and there's so much value, and you guys have an amazing solution for that. So I think on a separate time, I'd love to get into that. So thanks for
yeah.
being on here,
No
man. I
worries.
appreciate it, and I look forward to some donuts. Sent
Yeah,
dropped off by the office, maybe remotely or however you're gonna get it to us.
yeah. Exactly. I'll send them out to Vancouver. I don't think San Remo's out in
Yeah,
Vancouver.
well, I
So
think
when you
I
get
think
back.
Amazon's doing some sort of droid. Have you heard of this? They're doing like droid package drop-offs. Have you heard this?
Right, right. Yeah.
So,
Yeah.
maybe you
What?
can, when that's ready to go, maybe you can
Get,
just start dropping off some donuts here, bring them over from Toronto.
yeah,
But
exactly.
thanks again for being on the
All right,
call,
brother.
and all the best.
No problem, man. I appreciate it. Thank you.
Thank
See
you.
you later. Bye.